Hello guys, welcome to our YouTube channel Stocks for Everyone. Market is highly volatile nowadays and market condition is not looking that good. And having stocks with higher valuations is bit riskier, right? So I know that every one of you would be looking for high growth stocks but at a lesser valuation, right? So that's what I understood, and in today's video I'm discussing 10 stocks that are trading at lower valuations compared to their growth that they are expecting for the year FY26, right? And also we had already posted one video with SME stocks, and if you have still not watched that, then you can go ahead and watch. In today's video we have decided to show only 10 stocks which are trading in NSE or BSE, and these are all not SME stocks. The idea here is to show you 10 stocks that are trading at valuations lower than the growth that they are expecting for FY26, right? So there's no guarantee these stocks will do well or these stocks will actually reach that growth guidance also, right? So this is all the info that's collected from their con calls or from other financial sites, right? Also, please go ahead and verify these info that's being shown in this video for you also to get that conviction. And also at the end of the day, it's your money. So this is not a buy or sell recommendations. I'm not SEBI registered and I'm not intending you to buy these stocks. Okay. Now with that, let's get started. The first company in the list is Techno Electric and Engineering. So if you look at what they do, they are the leading power infrastructure company. It provides EPC services across power generation, transmission, distribution, and to industrial sector. If you look at the market cap of this company, it stands at 15,591 crores and PE is 35.8. Debt to equity is 0.01, so it's almost debt free, and ROC and ROE stands at 16.5% and 12.8%. If you look at their FY26 revenue guidance, they are expecting 3,500 to 3,600 crores, which is approximately around 58 to 63% from FY25 revenue. So they are quoting for high growth and the PE is around 35.8. So if they can reach this, we need to wait till the end of this fiscal year, right? And if you look at some notable points, then they are having high FIA and DIA holding. So that's also something that will give us some conviction, right? So study this stock. And then if we look at second stock, the second stock in the list is Senores Pharmaceuticals. So if you look at what they do, so by the name itself you can identify that it's related to pharma sector. It manufactures and develop affordable and high quality complex generics certified by global food and drugs authorities. And if you look at their market cap, it stands at 3,298 crores, which is a small cap company, and then PE is 56.3, so it's not less, and debt to equity is 0.4. ROC and ROE stands at 11.4 and 11.8%, and PEG ratio is 0.19. So generally people prefer stocks with PEG ratio less than 1. They usually understand it as undervalued stock. Here we can see PEG ratio as 0.19. And if you look at the FY26 revenue guidance, it's 50%, and FY26 profit after tax guidance is 100% over FY25. So they're saying they're expecting 50% of revenue growth and 100% of profit after tax growth for this fiscal year over FY25. So if they can really achieve it, we need to watch and see. And if you look at the notable points, then this stock is having high public holding. That's something that you need to be cautious of. Third stock in the list is Balu Forge. So if you look at what they do, this company manufactures fully finished and semi-finished forged components like crankshafts, railway wheels, transmission clutches, hydraulic motors, hooks, brake parts, etc. So you can easily say that this is into auto sector. And then market cap is 7,112 crores, PE is 31.4, debt to equity is 0.04, ROCE is 31.3%, ROE is 25.4%, PEG ratio is 0.35, and FY26 revenue guidance is 40 to 45%. Few points that you need to consider about this stock, then it has decent FIA holdings and slightly high public holding. So that's something that you need to think of, right? And fourth stock in this list is Genus Power Infrastructures. So if they look at what they do, then it's engaged in manufacturing and providing metering solutions and undertaking engineering, construction and contracts. Market cap is 9,358 crores, PE is 23.5, debt to equity is 0.73, so it's on the higher side. ROCE 19.2%, ROE 18.1%, PEG ratio is 0.31, which is good. FY26 revenue guidance, they're quoting 63.8% growth over FY25. And if you look at one important red flag about this company, it's having pledged shares of 66.7%. Fifth stock in this list is Tembo Global Industries. So I am sure many of you wouldn't have heard this stock. And then if you look at what they do, they are manufacturer and fabricator of metal products used in pipe support systems, fasteners, anchors, HVAC, anti-vibration systems, and equipment for industrial, commercial, utility, and OEM installations. And market cap is 909 crores. So you can almost consider it as a micro cap company. And then PE is 14.1, debt to equity is 1.22, which is a big red flag, right? It's having very high debt. Be cautious about this. And ROC is 31.4%, ROE is 36.7%, which are healthy, and PEG ratio is 0.07. And if you look at their FY26 revenue guidance, then they are quoting around 1100 crores, so which is almost 48% up from FY25 revenue. So they are expecting 48% growth in FY26 revenue. And for FY27, they're saying 1400 to 1500 crores. So it would be almost more than 100% from their FY25 revenue. And if you look at their FY26 profit after tax guidance, then they're quoting 80 to 100 crores, so which is almost 96% upside from FY25 PAT. And FY27 PAT guidance, they're quoting 200 crores, so which is approximately equal to 290% from FY25 PAT. So they're saying these things are achievable because of the support they're getting from the strong growth in defense and solar segments. So they are quoting some very high growth. So if these can really happen to what they are expecting, then that's something that you need to be looking at, right? But we can never have these things as guaranteed thing, right? So next day they can come and say that, okay, no, we are seeing negative growth for next fiscal year. Then whatever you put in the stock would be gone, right? So be cautious, study, and then take your own decision. And if you look at the notable points, then almost 10% of their shares are pledged, and it's having very high debt, and promoter holding is decreasing continuously. So if they can really have all this growth, then I'm not sure like why promoters would be selling the shares. We have seen this with many companies like Suzlon or even many other companies. So this is something that you need to think of, right? Sixth stock in this list is Transformers and Rectifiers India Limited. I'm sure many of you would have heard this name. And if you look at what they do, they are the leading manufacturer of transformers and reactors. They have very diversified portfolio, and it includes single phase power transformers, furnace transformers, rectifier and distribution transformers, specialty transformers, series and shunt reactors, mobile substations, earthing transformers, etc. It operates on a B2B model catering to power generation, transmission, distribution, and industrial sectors. And if you look at their market cap stands at 14,723 crores. PE is 56.8, so PE is not very low. Debt to equity is 0.23, ROC and ROE healthy at 28% and 23.4%, PEG ratio at 0.39. If you look at their FY26 revenue guidance, they're saying they're expecting to grow by 73.5%. So PE at 56.8 is like less than what they are quoting to grow, right? And notable points, they have pledged shares of 21.8%. And if you look at seventh stock in this list, then that is KPI Green Energy Limited. So if you look at what they do, they develop, build, own, manage, and maintain renewable power facilities, solar and wind solar hybrid power project as an independent power producer and as a service provider to captive power producers under the Solarism brand. If you look at their market cap stands at 8,792 crores, PE at 24.5, debt to equity 0.61, which is on the higher side, ROC is 17.5%, ROE is 19.7%, PEG ratio is 0.26. If you look at their FY26 revenue guidance, they're quoting 60% of growth for this fiscal year. And if you look at the key red flag, then they also have pledged shares of 45.5%. Let us look at the next stock in this list, that is Skygold and Diamonds. If you look at what they do, they are engaged in the business of designing, manufacturing, and marketing gold jewelry. Company follows B2B model where the products are mainly sold to mid-range jewelers and boutique stores who sell these products through online platforms and retail stores. And if you look at their market cap, it's around 4,288 crores, PE is 27.7, debt to equity is 0.92. And for gold business, generally they have higher debts, and even this company is having high debt. And ROC is 21.2%, ROE is 25.5%, PEG ratio is 0.20. If you look at FY26 revenue guidance, they're saying that they are expecting 50% of revenue growth for this fiscal year, and also they are expecting 7,600 crores of revenue for FY27. So again, they are saying that they would grow by 40% in FY27 also, or FY26. So if they can really achieve, that's one thing. And also for gold companies, please note that uh, the gold price also matters, right? So if you're selling 100 pieces of gold at 100 rupees, and then your gold price increases, and now next year if you're selling it at 200 rupees, then even if you sell 100 quantities, then you know what's the revenue difference, right? So that's something that you need to look at. Mainly here, the growth is based on their volume growth, so, or your profit growth, because of the other ways that they can earn, maybe their design or some other charges that they would do. So that's something that you need to look at. And if you look at FY27 profit after tax guidance, they're expecting 340 crores of profit compared to FY25, so which is almost 156% from their FY25 profit after tax. And if you look at one notable point here, then they're having high public holding of 38%. So that's something that you need to consider. And ninth stock in this list is Enviro Infra Engineers Limited. So if you look at what they do, they specialize in designing, constructing, operating, and maintaining water and wastewater treatment projects and water supply scheme projects. Market cap is 4,300 crores, PE at 22.6, debt to equity 0.24, ROC is 31.7%, ROE is 27.4%, PEG ratio 0.31. And if you look at their FY26 revenue guidance, then they're expecting 35 to 40% of growth for this fiscal year. And if you look at one red flag, then DA holding is decreasing. So that's something that you need to worry about. Last stock in this list is Suzlon Energy. So if you look at what they do, then it is a renewable energy solutions provider, and it's in the business of manufacturing, project execution and operation and maintenance of wind turbine generators and sale of related components. If you look at the market cap is 75,000 crores, so it's already a large cap company, and PE is 35.8, debt to equity is 0.05, almost debt free. ROCE and ROE healthy at 32.5% and 41.4%. PEG ratio 0.18. If you look at their growth guidance, then for FY26, they're saying they would grow almost at 60% in all growth parameters like your revenue, EBITDA, and many other things, deliveries, and other things. So they're expecting approximately 60% growth for this fiscal year. And if you look at one main red flag, then they have very low promoter holding, and also public holding is very high. So these are the 10 stocks that I wanted to show in today's video. And it doesn't mean that there are only 10 stocks with high growth guidance and less PE, right? So this was for today's video. If you have not yet watched high growth SME stocks video, then you can watch it in the pinned comment below or in the description section. But if you really like this video, then please hit that like button, subscribe to our YouTube channel. If you want a detailed analysis of any of these stocks or any other stocks, then please put it down in the comment section. Wait for the next part to be released soon, right? Till then, take care and see you guys in the next one. Bye.